My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today we got another great guest. We've got Jean Paul Szita. He is zooming in all the way from beautiful Miami, Florida, which happens to be where my lovely daughter Amy lives as well. And JP is a very experienced real estate investor, do a number of things, multifamily, I believe, commercial as well. We're going to have an interesting conversation with JP today. So welcome to the show, JP.
Thank you, Dave. Thank you for having me. It's a pleasure to be here. Yes, from Miami, I'm sure it's very different than from Canada.
It is. And I just realized that I still mispronounced your name. So there's no Z sounding in there. It's Szita.
Szita, just like that.
JP yes. Szita. Very good. So JP, we're in the middle of 2025 right now as we're recording our show. Can you zoom out and tell us what it is that you do in real estate? What are you investing in? What asset classes? What markets? What's your main bread and butter these days?
I think in today's environment, Dave, we need to look at things from a different perspective. This is not the game that we used to play 5 years ago, right? Yeah. The playing field has changed, and therefore the playbook has to be refreshed, right? You don't have to look at the normal stuff anymore. You need to consider global events. And by considering global events, it's like really what's happening around the world is impacting here. And what's happening in the economy as a whole, it affects everything. It's beyond real estate. It's beyond what you believe money is. You need to have a clear understanding where you're going to store value today, right? Okay. And how value can make you money, right? And money means actual money, not fiat money. Money increase your wealth. And answering your question, we focus on different kinds of strategies in terms of real estate, short term, longer term, cash flow. And also, we like to call it, we as a private equity firm, we like to call it, we invest in the foundations of life. It's real estate, technology, and essential sectors. Some people say, what is essential sectors? Well, it's everything else, right? But in reality, so far has been food and energy, right?
Food and energy.
Okay. Food and energy, because these are the essentials of life. Things that we all going to need no matter what, regardless of the economy. You need shelter, food, and energy. And part of that is integrated around technology, right? And part of the strategy is we are positioning our strategy, our portfolio to be ready for turbulence. We expect things to get a lot worse. We don't believe the narrative. We don't believe the headlines. We truly prepare for the worst. And because if we can weather the worst, things are going to worth a fortune after that.
Okay. So what are you invested in right now, middle of 2025?
Investing is... I would say that there is no one rule for all. It all depends.
No, I'm asking, what do you have in the portfolio right now? You've got a whole bunch of different asset classes.
What we're looking at is, of course, multifamily okay. Class A. That's critical. We also have another vehicle that invests in really opportunistic. And when we call opportunistic, we call the first profit is when we buy it. And having that said, you say, what is it? Really, you can find deals in multiple places when you arrive aggressively with cash and with a fast closing. You can get a lot of things in multiple areas. And also we have a unique product that it was very hard to develop. And somebody might say, oh, it's so easy, but it was hard to develop because we reverse engineer it. It's we invest in luxury waterfront properties in Miami. You know, those homes that you see for $20, $30 million.
Yeah.
But they have been designed as a vehicle from a different perspective. It's not from the perspective of the developer. The developer is like, I have this idea, I'm going to build it, and let's hope for the best. Here we did it from the investment point of view, and from the investment point of view as a private equity firm, it's like, how can we achieve what we're looking for? And is it possible? And then we reverse engineer to come up with the whole plan, how it needs to be done to achieve certain metrics what we're looking for.
Okay, I'm still confused what you're investing in, JP. So I got some multifamily.
Most of
I got some luxury properties in Miami.
Yes.
We talked about technology. We talked about food. We talked about energy. So maybe I'm asking the wrong question. What your company has a very kind of broad spectrum of things that you'll invest in. Another way to ask this might be, when you're talking to potential investors, because you're an equity firm, right? So you're raising capital to get into these investments. How do you explain to them where their money's going to go?
Actually, I do it backwards. We focus on provide a solution, see, because in all honesty, nobody knows you, nobody trusts you, and nobody cares about what you do, right? So why would anybody cares talking to you? Because you will give them a solution to one of their problems, right?
Okay. Yeah.
And in that, so we first like to see what is your issue, what is it you're doing, and we realize in the process that they have allocations in the wrong areas, and or they're too risky, or they need to liquidate some positions to really convert them in a medium long term, or some of them short term, to be more efficient. So during the process, right, we always we like to anchor them in real estate, because we have 3 investment vehicles that we call it uniting makes you stronger, right?
Yeah.
And why do I say that? Because if you try to invest individually, which we have many investors that they do, you need to come up with big resources. Real estate is capital intensive in many ways. We all know that, right? But if somebody comes to me and says, hey, I have 500 grand or $1 million, or I have, let's say, 200 grand, and I want to invest in real estate, really, there's nothing you can do, because you most likely are going to lose your money, right? So in that way, that's why we have these vehicles that united make you stronger. You combine it with other people, and there you have a bigger mass. And with a bigger mass, we go in real estate. And as I explained, depend on what the client is looking for. And I will define it very quickly. We define it 3 strategies. First of all, somebody said, "Oh, I want to invest my money 100%. I wanna have low risk, and I wanna have monthly payments." Well, that's easy. It's what we call the boring, never crash multifamily, right? You put the money there.
Well, a few people in multifamily might talk about a crash these last few years.
Well, and that's a very interesting point, because if you buy the typical, you believe the narrative of the brokers, so you buy with the high debt and with negative arbitrage, for sure, you're going to crash and burn hard, right? So, but the staple of the company, we focus on capital preservation, which is in a nutshell, best locations, low debt, high reserves, right? Because you need to withstand, nothing happened as you predicted. So that's one. Then somebody said, JP, I don't care about the monthly distribution. I want to grow my money. Well, then we put you in the value opportunity fund, right? Which is more aggressive. It has a compounded effect, where we can invest in some assets, flip them within 36 months, and reinvest that and create a little compounded effect. And then we have the people that say, I don't understand anything about real estate, and it's confusing, and I really I want to see. I don't want to spend 5 years in this thing, and on top of that, I don't want to put too much money, and I want to be proud of it and be able to tell my friends and family what I'm doing. And that's why we created the luxury home fund. Those beautiful properties that everybody can understand, and we can explain it in basic metrics that everybody knows what a home is.
Mm-hmm. Okay, so basically you've got three funds at the moment. Is
Yes.
that what I'm understanding? Okay, cool, JP. And who are your typical investors that come on board with your funds? Who are these
Well,
folks?
the funds they're subject to oversee by the Security and Exchange Commission. So there is heavily regulated in that sense. So they can only be accredited investors
Right.
for those. And accredited investors, for whoever is listening, means you either make $200,000 a year, or combined with your wife 300,000, or you have $1 million in total asset, except your residence.
Excluding your
Yeah.
residence, exactly. Okay, so and over the years that you guys have been doing this, how long have you been running these funds for, JP?
Well, these funds, we recently introduced them after hearing a lot of from a lot of customers, because during my career, most of my customers have been ultra high net worth individual, and we have been focusing in JVs, joint ventures.
Yeah.
So basically, hey, we want this kind of property, we want a hotel, office building, or a retail center, or we prepare those opportunities, we present them, and we do based on what they want. However, as after COVID, you could say, or during COVID and after COVID, everybody got very afraid. And when you're afraid, is the interesting part is that you don't make decision. You make the decision of doing nothing, which is more expensive. We all know that leaving the money in the bank, it costs you more than doing something because of the inflation, right? And as you know, the inflation is not 3%. That's for politics, right? So the other investors have becoming more and more restricted, and when you present an opportunity, they like to tweak it in a way that is not how you present it in the first place, right? They want to jack up the debt, they want to lower the budgets in what you need, and they want you to perform in a certain way, and then you're like, that's not gonna work, really.
Yeah, they're messing with the pizza recipe, and it's not going to come out the same way, right?
Exactly. So after some time I'm talking to people, and before you were able to, you get a big partner, and then you are able to put the little partners in the deal. But now the trend is like, no. I don't want little partners. I want to do it on my own, because I want to decide exactly how I want to run this thing.
Okay.
So what happened to all the guys that want to put 2, 3 million, 5 million, or 1 million, or 500,000? So I always tell this story, right? I call it the dentist story, right? One time I had this thing on my tooth, and I called my dentist. Was during the weekend, and he said, "Come over, I take care of you." And he's close, and I show up, and I said, "How did you open for me?" I said, "It's very simple. If I don't take care of you, you're gonna find somebody else that is open, and probably I'm gonna lose you as a customer." Right? That really resonated in my head, and over the years, so I'm like, well, I don't want to lose all the small customers. What are we going to do about it, right? That's why we created these vehicles that, on the bright side, it allows us to talk about them, like in this show, and have a general solicitation. Basically, we can talk about it without restrictions, and it gives the opportunity to smaller investors to participate in these strategies.
Yeah. So JP, just out of curiosity, where are you from originally?
Originally, I'm from Chile.
Okay.
Yeah, I arrived 30 years ago. Yes.
Well, it's interesting because I suspected something like that, because your perspective on investing in money is different than typical North Americans. And I would imagine that part of that's based on your life experience growing up in Chile, where inflation, 9%, 7% would be a dream, 30, 40, 50% inflation, things like that is not uncommon in other countries. So
Actually, no, I arrived very young here. I arrived at 21 years old,
okay.
really ultra naive and ultra stupid in many ways, right? And now I'm just wiser and have more experience, right? But as everybody else, still making mistakes, but learning from them, right?
Yeah.
But over the years, I have learned basically because 90% of my clientele has been international.
Ah,
You know? So I had to be focused on what's happening around the world
yeah,
and what's
exactly.
happening locally, and really understand how the money flows around the world. And that start giving you a unique perspective, because then you start looking about demographics, the value of gold. Then you're like, really, what's happening? How is the stock market going up? Is it really going up, or is it pumping from or other sources? And when you start putting everything together, and then you realize that all the information is there, but you need to absorb it on your own without reading what they feed you.
The bias. Yeah.
Exactly.
Yeah.
Every publication has their bias, and all of them has a unique signature. We don't focus in any of that, because at the end, we are alone. There's no politicians going to come to save us. No bank is going to help us. Every possible institution is going to try to really take advantage of all of us. So really, we have each other, and we need to play the system in our favor.
Yeah. Well said. All right, JP, if people want to connect with you and find out more, where should they go?
I think the easiest way and the most personal way is through LinkedIn. LinkedIn, if you go to our website, probably, you have to fill out the form, but LinkedIn, you send me a message, it will get directly.
So how do people find you on LinkedIn? What do they type in?
My name is Jean Paul Szita. I guess I'm the only one. I haven't found another one. It's JEANPAUL, and my last name SZITA. And you can also type on the internet, find all kinds of things about me, and or the name of the company, BEO Investments LLC. It's BEO Investments LLC, and that's how you can find us.
Awesome. Well, JP, thank you very much for being on the show.
I appreciate it, Dave. Thank you so much.
All right, everybody, take care, and we will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.